up until maybe 2 months ago, you had Larry Fink absolutely sticking it to Bitcoin and telling us how awful it was horrible, and it's for fraudsters and it's money laundering and all the rest of it. Anyway, he puts in an ETF. Now all of a sudden he works for us. He's selling Bitcoin. And I take this with a grain of salt, but he's out there on CNBC talking about Bitcoin being a flight to quality. And I'm like, isn't that interesting? Now, take that with a grain of salt because he's the world's greatest salesman and he's got something to sell us. But what is bigger than Larry in this instant anyway is a couple of weeks later, Mohammed El-Arian, the ex-head of PIMCO, the largest bond trader or bond fund in the world, and now head of, what is he, Chief Investment Officer for AllianceBernstein, a mega corporation, which to my understanding doesn't have an ETF. He was on CNN talking about the fact that the people he talks to, and the people he talks to are basically every hedge fund on earth, every sovereign wealth fund, every major central bank. They're the type of people he talks to on a daily, monthly, quarterly basis. And he was saying that in his conversations that he's having, stocks and Bitcoin are considered safe haven assets. And I'm like, come again? What was that? Safe haven assets? And so the reason why this is such a monumental or a tectonic shift is I can tell you that as an investment advisor, when we first started talking about Bitcoin, we had to, tread on eggshells. We had to talk about it as being a major risk. You could lose all capital that you put into it. So we were comfortable talking about Bitcoin being a 1% to 2% allocation. And that was back in 2016. And there were a whole host of disclaimers and education that we put clients through to actually get that 1% to 2% into Bitcoin. Anyway, the reason why I bring that up is because the advisors who are entering the space, or the ETFs that are going to be serving the advisors in the space now, are going to be starting with those conversations with their clients. Hey, this is a nascent asset class. We want to have exposure to it. It's a new asset class. This could do wonderful things for your portfolio. It could juice returns a little bit. Let's put in 1% to 2%. Now, that's where they'd start prior to those two conversations being understood. And I talked to a couple of mates who are financial planners, and I said, did you see what Mohammed El-Arian said? And both of them said, no, don't know what you're talking about. I said, listen to this for a thing. And the reason why that's so important is because when you have Bitcoin classified as a flight to safety, a safe haven asset, flight to quality, safe haven asset, sorry, that shifts the conversation for the investment advisors, the wealth advisors, from having a 1% to 2% allocation to having a 5% to 20% allocation. That's a very different weighting to a client's portfolio. And in the last 12 months, we've seen BlackRock reports released where they talked about having the ideal allocation of Bitcoin was 86%. Personally, I think that was a beat up with a Bitcoiner just putting that on a letterhead, but it's fun to think about. But the real impetus of the importance of those two people talking about it, all of a sudden, two of the most respected figures in finance who literally have the ability to shift trillions of dollars with the words they say, are now talking about Bitcoin being a safe haven asset, and that moves the conversation for the advisors from a 1% to 2% allocation to a 10% to 20% quite easily.